Hi everyone, this is Brian again. I just want to follow up on what I was talking about yesterday. I tried to jam a lot into a little bit. Today I want to just focus on that one topic about real returns versus those actual returns and why you can't time the market. Nobody can time the market, nor can we pick when we were born. If you can't pick when you were born, you certainly don't have a lot of options about when you're going to retire. 62, 63, 64, those are all those ages are dependent upon when you were born, which is just random. It's just luck. So get the idea of trying to time the market out of your head, but that's actually what's going on when you're putting your money in the market. You're trying to time the market because you're trying to pick when you want to get out based about when you were born, which determines when you can retire. So I made a table this morning illustrating some of those significant periods of time that can show you, here's the years, column A, from 1929 to 2017, that was 88 years. The average return was 7.24. The actual return was 5.4. $1 invested back then would be worth $107.53 today, not inflation adjusted. I'm not including dividends nor fees. Well, I was born in 62, so I wanted to take a peek at that. 55 years, not bad. I mean, I would take these returns. Okay, for 55 years, sign me up if they were guaranteed. But again, we're looking backwards. This is not a guarantee looking forward, right? So then I was looking at some, so if you were born in 50, you can look. If you're born in 70 or 80, then I broke us down to some 10-year periods, 1980 to 1990. Wow, look at those returns. Those are pretty amazing. So if you happen, the way I look at this is if you were left of 90 or right of 90, you were probably somewhere near this average. So say 87, you were going to retire somewhere between 87 and 93. You probably did somewhere around here before the averages started changing. If you happen to be born at a time when you can retire in this period, look at this 10-year period. It's amazing. Okay, again, backwards, this is not guaranteed to happen in the future. So anyone illustrating this is basically just telling you a fairy tale. This did happen, might not happen again. So I go this 97, I go left of it, say 3 or 4 years, go right of it 3 or 4 years. You're probably still going to get somewhere close to here. Again, it's just luck. It's not your genius that said, oh, I happen to be a great investor. I made 14.26. Yeah, great. That was just luck. Right, all these geopolitical events, World War I, World War II, 9/11, the real estate crash, those are events that are so random. No one has control of them. But this is what I want to hunker down on right here. Check out these 3 10-year periods right here. You actually lost money. Your actual returns were negative. Okay, so that's not just one 10-year period. That's 3 10-year periods. So there's a lot of millions and millions of people needed to retire at this time. If they happen to be in the market at this time, more than likely, their nest egg went down big time. So, this is proof right here. The numbers don't lie. You probably lost money if you were going to have to retire and you were in somewhere in this period in here and you were relying on that nest egg to give you $200,000 or $300,000 or $400,000 that you're going to live off. Well, you don't have that when you needed to retire. So you would either have to get out of the market and work longer, thus adjusting your retirement age, or you shouldn't have been in the market, So, and more recently, look at 2007 here. This return is not good enough. And then your actual return isn't good enough to justify all the risk that you're taking on such an important aspect of your life. Retirement. You don't get a second chance, right? So you got to be aware of these numbers before you put your money in the market's way. The market is a difficult beast to contend with. You got to be careful. So here's my conclusion. If you're in the market right now with your retirement money and you're going to retire in the next 7 years, get out of it right now. Okay. Don't put yourself in peril. Or more wisely, just don't be in the market at all. While you're accumulating your nest egg, if you want to participate in the market, your intuition's telling you what Microsoft's going to do and you just want to play the market a little bit, use some side money for that. Do not make that your nest egg. Every day that you're in the market, there is a chance that there's a geopolitical event that's going to tear down the market. How long that will last, I don't know. Look at that chart. You can see. Nobody knows. But there's a product that will allow you to participate in 70% of the market's upside while at the same time saving you from any of the market's negative returns. Isn't that great? Growth minus all the, the risk. No pacing, no uncertainty, no sleepless nights. Hey, contact me at brianquigley120@gmail to learn more about this amazing product. I believe in it completely. I hope this was a valuable use of your time, and I hope to hear from you.